our knowledge series on corporate tax in UAE. In this video you will learn about the permanent establishments. This video covers the following important matters of permanent establishments: PE, identifying a PE, fixed place of business PE, agency PE or dependent agent PE, investment managers, taxation of PE, foreign PE exemption and election condition, tax losses of foreign PE. Introduction. In this video we shall discuss about existence of a permanent establishment in accordance with corporate tax law, elections and apportionment of profits related to the foreign PEs, identifying a PE. Under Article 14 of the corporate tax law, non-resident person has a PE in UAE when either of the following applies: fixed or permanent place in the UAE through which the business is wholly or partly carried on, a fixed place of business PE. Person who has and habitually exercises an authority to conduct business in the UAE on behalf of a non-resident person, an agency PE. Any form of nexus in UAE to be specified in a cabinet decision. An example of this nexus could be an online business of non-resident person with majority customers in UAE. Fixed place of business PE. Under Article 14 Clause 2 of the Corporate Tax Law, a fixed place of business includes place of management where key management and commercial decisions that are necessary for the conduct of the business are, in substance, made. Branch, office, factory, workshop, land, buildings, and other real property, an installation or structure for the exploration of natural resources. Mine, an oil or gas well, a quarry, or any other place of extraction of natural resources, including vessels and structures used for the extraction of such resources. Building site, or a construction, assembly, or installation project, or supervisory activities in connection therewith. For there to be sufficient permanence, the site, project, or activities, separately or together with others, must last more than 6 months, including connected activities conducted by related parties of the non-resident person. Under Article 14 Clause 3 of the Corporate Tax Law, there are certain exclusions which do not regard a place as a fixed place of business PE, if it is used solely for any of the following purposes: storing, displaying, or delivering goods or merchandise belonging to the non-resident person, keeping a stock of owned goods or merchandise belonging to the non-resident person for the sole purpose of processing by another person, purchasing goods or merchandise or collecting information for the non-resident person, conducting, for the non-resident person, any other activity of a preparatory or auxiliary character, any combination of the above activities of a preparatory or auxiliary nature. As per Article 14 Clause 4 of the Corporate Tax Law, the aforementioned exclusions do not apply if the same non-resident person or their related party carries on a business anywhere in the UAE, where either that place itself constitutes a PE, or where the person's activities taken together create a cohesive business. Agency PE or dependent agent PE. Under Article 14 Clause 5 of the Corporate Tax Law, activity in UAE by the agent of a non-resident person will create an agency PE where person habitually concludes contracts on behalf of the non-resident person, or person habitually negotiates contracts that are concluded by the non-resident person without material modification by the non-resident. Article 14 Clause 6 of the Corporate Tax Law states, if the agent is acting in the ordinary course of business and does not work exclusively or almost exclusively on behalf of the non-resident person, that is, if the agent is legally and economically independent, then their activities will not give rise to an agency PE. Under Article 14 Clause 7 of the Corporate Tax Law, the minister may specify conditions under which the mere presence of a natural person in UAE will not create a PE, where their presence is a consequence of a temporary and exceptional situation, or where they are employed by the non-resident person, but their activities are not part of the core activities of the non-resident or related parties, and where the non-resident does not derive any income from the UAE as a result. Under Article 2 Clause 1 of Ministerial Decision No. 83 of 2023, presence of a natural person would not create a PE for a non-resident person, if it is as a consequence of a temporary and exceptional situation where all of the following conditions are met. Presence of the natural person in UAE is a consequence of exceptional circumstances of a public or private nature. Exceptional circumstances cannot reasonably be predicted by the natural person or the non-resident person. Natural person did not express any intention to remain in UAE when the exceptional circumstances end. Non-resident person does not have a PE in UAE before the occurrence of the exceptional circumstances, and non-resident person did not consider that the natural person is creating a permanent establishment or deriving income in UAE as per the tax legislation applicable in other jurisdictions. Article 2 Clause 2 of Ministerial Decision No. 83 of 2023 states, an exceptional circumstance is a situation or an event beyond the natural person's control, which occurred while he was already in UAE, which he could not reasonably have predicted or prevented, and which prevented him from leaving UAE as originally planned. Examples include a natural disaster, public health emergency, and an act of war. Investment managers. According to Article 15 Clause 1 of the Corporate Tax Law, special rules apply to an investment manager acting in the UAE on behalf of a non-resident person, which enable an investment manager to carry out work without a PE being created, if all of the following conditions are met. Investment manager is in the business of providing investment management or brokerage services. Investment manager is subject to the regulatory oversight of the competent authority in UAE. Transactions are carried out in the ordinary course of the investment manager's business. Investment manager acts in relation to the transactions in an independent capacity. Investment manager operates on an arm's length basis with the non-resident person and receives customary compensation for the provision of the services. Investment manager is not the non-resident person's representative in UAE in relation to any other income or transaction otherwise subject to corporate tax for the same tax period, and any such other conditions as may be prescribed by the minister. Under Article 15 Clause 2 of the Corporate Tax Law, a transaction for the purpose of aforementioned Clause 1 means any of the following: transactions in commodities, real property, bonds, shares, derivatives, or securities of any other description. Buying or selling of any foreign currency or in the placing of money at interest, or such other transactions permissible to be carried out by the investment manager on behalf of a non-resident person under the applicable legislation in UAE. Taxation of PE. Non-resident company with a UAE PE will be subject to UAE corporate tax on taxable income attributable to the UAE PE. UAE resident company with a foreign PE will be subject to UAE corporate tax on all of its worldwide taxable income, including that of the foreign PE. Foreign PE exemption. Profits of the foreign PE of a UAE company will be part of the UAE company's taxable income. However, as per Article 24 Clause 1 of the Corporate Tax Law, there is an election available to exempt the income of a UAE company's foreign PEs. According to Article 24 Clause 6 of the Corporate Tax Law, this election will exempt the income of all foreign PEs, subject to the foreign PE fulfilling the election criteria. It is not possible to select certain PEs for exemption and leave the profits of other PEs. As per Article 24 Clause 4 and 5 of the Corporate Tax Law, in determining the income and associated expenditure of a foreign PE, a resident person and each of its foreign PEs shall be treated as separate and independent persons. Any transfer of assets or liabilities between a resident person and its foreign PE is treated as taking place at market value at the date of transfer. Election condition. Article 24 Clause 7 of the Corporate Tax Law states, the foreign PE exemption is only available where there is corporate tax or a similar tax in the relevant foreign territory, at a rate not less than the rate of corporate tax applicable in the UAE. Tax losses. Under Article 13 of Ministerial Decision No. 116 of 2023 on the participation exemption, if a taxable person has offset a tax loss incurred by one of its foreign PE, that tax loss must be fully offset by taxable income received from that foreign PE in subsequent tax periods before. Taxable person can elect to apply the foreign PE exemption in relation to that foreign PE, or any income arising upon or following incorporation of the foreign PE can benefit from the participation exemption. For instance, dividend exemption from the foreign subsidiary, with 5% shareholding by resident company, that was previously a foreign branch, foreign PE, cannot be claimed until utilized tax loss of that foreign PE is offset against its taxable income received by resident company. This ends our video session. Subscribe to our channel, and click on notification icon to stay tuned to the series of valuable material that will cover all aspects of the UAE corporate tax. Our partner is available for free consultation who is holder of FTA-approved UAE corporate tax qualification. His contact details are provided here. Visit finexcel.ae. Navigate to our clients and testimonials webpage to see more clients' review on our services and our major clientele. Contact us for more detail. FinExcel. We create value that matters.